All right. Hi, everyone. Thank you so much for joining us today. We are super excited to present our 5 tenets of impact management and measurement, which has been compiled over several years of underwriting funds and companies in the impact space. I'm Ali Matroni, an advisor on our team at Align. And if you aren't familiar with Align's work, we are an impact investing advisory firm. We work with individual investors, families, family offices, and foundations to get clear on their values and how their resources might be leveraged to impact the issues that they care most about. And then over time, we help them build investment portfolios that reflect those values. Because we are an advisory firm, our role in the space is to partner with our clients as they navigate the ever evolving and expanding impact deal set. So as a firm, we've reviewed over 1,500 private funds over the years that are all intending to somehow incorporate impact-related goals into their investment theses through various impact measurement and management practices. Over the last year, we've crystallized our learnings into 5 tenets that we hope can be used by fund managers and investors to help improve IMM as a whole. So without further ado, I am thrilled to introduce Ishita and Humayu. Humayu is the Director of Investment Research at Align, and Ishita leads our catalytic capital and philanthropy vertical. The two of them have put many hours into this content, so I will pass it over to them to walk through the tenets and facilitate a panel with some experts that we have on the call here today. One piece of housekeeping quickly, please drop your questions in the chat throughout the event and hold them until the end. We will have some time at the end to ask the panelists and our team questions about the content. I will pass it over to you guys.
Lovely. Thank you, Ali, and thank you everyone participating today, the panelists and people who are listening in or looking at this presentation. We're excited to share these findings. It's been sort of a long time coming and really a result of us trying to make sense of the really expansive universe of what impact management and measurement has become. But to start with setting the context of our work, I just want to ask Ishita to maybe share a bit about who the main stakeholders are from our perspective in this impact management and measurement discussion.
Thanks, Humayu, and thank you everyone for joining. Really excited to be here. Yeah, identifying the stakeholders is the first thing that we needed to do to really understand impact measurement and management and how we approach it. One of the core challenges is that there are some stakeholders who are in these conversations and then some stakeholders who aren't. 3 core stakeholders that we've identified that are generally in these conversations are asset owners, asset managers, and social entrepreneurs. The other stakeholder, though, that I'd want to identify is the end beneficiary or end customer who is really facing the impact or really enduring it. And 2 big takeaways we've had with stakeholders are, one, that the end beneficiary is generally not in these conversations. And the second is that there are power dynamics across this group, and asset owners are really sitting at the top of that pyramid.
Thanks for sharing. And I know we'll touch back on some of these themes later as well, but can you talk a little bit about like the problem that we are trying to solve or we were trying to sort of aim for?
Yeah, a great question and a loaded question, I would say, and one that took us a few years of collecting data and observations to really understand. And I think quite a few heated debates between Humayu and I to even arrive at like what are the core problems. I would boil it down to 3 things, though. The first is that there is a lot of confusion about how to approach IMM beyond really just thinking about surface level labels. What does it mean to think about the philosophy and systems that really revolve around IMM? The second is that in our seat between asset owners and those that are doing the impact, we see that there's a lot of fundamental issues with how IMM best practices are incorporated today. And then the last I would highlight is that there's been great innovation in this space, but some of the emergence of this innovation has also faced inertia, and we'd really want to think about how others can experiment more with IMM. And I guess maybe taking the problems that we're trying to solve, I'd love to understand from you how you thought about how the tenets are getting us closer to solving these problems.
Absolutely. I think some of it, and I was reflecting back on the process as well, and what has helped us as an organization at Align and within the research team has been coming together and figuring out some guiding principles, or coming together as an organization and understanding what our values are. So whenever we are making decisions, more tactical decisions or strategic decisions, we have something to look at to be able to say, how does this decision impact the or compared to what we're aiming for from that perspective. And then principles and values, and there are many other names for having sort of a shorthand for what you're aiming to do. And I felt like after our conversations were just or our work on IMM being so broad, I felt like a similar set of tenets or principles will be useful for us, for our work, and for something that we can share, so people can, again, if you're making a tactical decision or a strategic decision with regards to impact measurement and management, you can go back to these tenets and see, okay, how am I faring on these? Or if you're working with a blank slate, you can just look at them and say, okay, how do I get started? I think it works both ways. So, and it, again, just from experience, it's helped us a lot to be able to have more pointed conversations on what we want to see with fund managers. And the hope is that this would translate to others too.
Can you just share what are these tenets?
Yeah, let's end the suspense. I'm just gonna share my screen. And
I believe we'll be sending these after the webinar today.
Yeah. Is this working? Okay. Great. Yeah. So I think I was just reflecting on where actually I don't know the right answer. So it's like, is it impact measurement and management, or impact management and measurement? Maybe we need a quick device to remember that too. But the way we were thinking about this was management as a separate topic, which is often not elevated to the front of the conversation. The conversation ends up being about metrics or measurement. So we wanted to address management as a separate issue, talk about what we think can be improved on the measurement side. And then coming back to your comment about power dynamics and how different stakeholders interact, how can we talk about that issue in a manner that is meaningful, but also is beneficial for the overall industry. So I'll run through this list just to give a preview of what our main thoughts were. And as Ishita shared, we're planning on doing a broader outreach with the details of our findings and some specific recommendations as well for the industry. So the first couple of tenets are focused on management, and really the main theme here is that our recommendation and our insights is that stakeholders who succeed in setting up IMM in a good manner are ones who are making investments early on. So our recommendation is champion change early on. Don't let this be an afterthought after you figured out your fund strategy or your financial strategy and then adding it on as an extra layer, because hiring early, investing in data systems, or planning in advance for how the impact management infrastructure will be part of the overall firm or fund's infrastructure is really important to set things up for success. And to dive in a bit deeper into this specific issue, or making clear how we would prefer the order to be in terms of management versus measurement, we'd want management to come first. We've seen a lot of players in this space coming up or looking at a specific metric first and then trying to backtrack or reverse engineer their way to saying, how do we achieve this metric? Our, again, ideal recommendation would be to focus on management as a part of the infrastructure first, and then let that lead to measurement, so that the measurement piece is also meaningful. And the next couple of the tenets: avoid metrics myopia and innovate through incentive structure. I just do want to give a shout out to Ishita, who spent a lot of creative copywriting time to make these the way they are, so easy to remember and really communicating the message. But the key message again here is with regards to measurement, we'd like metrics that are not just headline numbers, because we see reports where it says, I think the most common example would be GHG emissions avoided in a certain number without saying what period this covers, what is the quality of the emission reduction or avoidance. And because that headline number becomes such a big part of how impact is translated, it can be confusing to the reader, or it's almost sometimes impossible to compare. And our other recommendation with regards to measurement is to, I think this applies across the board to us, is that we want incentives to be at the center of measurement, because that's how that's the best way to ensure that measurement is taken seriously and is set up in a way that where all parties are aligned on achieving the same outcomes. And quickly, lastly, the last one is about power dynamics. And we just wanted to highlight that limited partners and asset owners are often in the driving seat in terms of dictating what impact reports should look like, what metrics should be surfaced. And we want to advocate for asset owners to be more mindful in how they think about their feedback and what directions they nudge fund managers and entrepreneurs in with regards to their IMM practices. So we're excited to share more, and there's a lot of discussion coming up, but this is the gist of what we came to, and I'm gonna go back to stop sharing. Okay. This was a quick flash for everyone else, but obviously Ishita has been sitting or working with this information for a very long time as we work through which ones we'd prioritize out of a longer list. But do you want to share, Ishita, if there's one of these that you'd want the audience to remember? Do you have a favorite one?
It's a little like choosing my favorite child, which I don't like to do, but I think if I had to select one, I'd want to focus on the systemic issue, which I would say is burst the LP bubble. Thinking about the power dynamics there, and also understanding who the experts are in really cultivating IMM practices as the ones who are doing the impact, not necessarily the ones who are investing into impact, is very important. So I think my nudge would be to have investors have a little bit of humility in this conversation and really think about what domino effect it can set by having the practitioners be the ones who are leading how IMM is done.
Excellent. Is there something that didn't make the list that you want to highlight?
Yeah, there were so many things that didn't end up making the list, but I think maybe one that I recall pretty vividly is about the cost of impact measurement and management. Who is most suitable to be paying for the time and the resources that go behind impact measurement and management across all of the stakeholders? And I think one of the reasons it didn't end up making the list is because it's still a pretty nascent field of exploration. Hoping that maybe in the next few years, we have more data points that can really point to more robust insights from us on who is most suitable to pay for that. Humay, from your end, if we were trying to solve this 5 years from now, what do you feel would be the problem that we're thinking about most?
I would say, yeah, that's I was also thinking of like what were the problems 5 years ago. I guess 5 years ago it was just even the getting people to have some metrics or some measurement as part of how they're thinking about impact. So we've already come a long way. I think the incentive structures are really like the cutting edge part of this direction, and we're seeing more and more funds be early adopters of those innovations. So I hope to see, like in 5 years, that it's a completely different landscape, but we also have a lot of evidence to go on what worked and what didn't.
Thanks for that perspective. And I think as the industry grows further and coalesces on best practices, I believe that we'll come back to this conversation to see what progress has been made.
Absolutely.
And with that, I'd love to shift to 3 people we've invited who are actively shaping IMM. So we have 3 panelists that we've invited today, and I'll introduce each one of them. So we have Ben Morsley. Ben is a partner at Boston Consulting Group and leads impact diligence and reporting for private equity deals. We have Maya Hartigan, who is the founder and CEO of May, a digital health platform that connects expecting mothers with critical resources. And last but not least, we have Christy Kiekler. Christy is the senior director at The Impact, and The Impact is a global membership of high net worth individuals committed to aligning their assets with their values. Thank you, all 3 of you, for joining us today. I'd love to maybe go around the room because all 3 of you sit in very different seats in the ecosystem, and just learn about your unique position and how each stakeholder brings a different perspective from where you're sitting. So maybe Ben, if we can start with you.
Thanks, Vishita, and thanks so much for this conversation. It's great to be in dialogue today. So you're exactly right. I work with the Boston Consulting Group, and my main clients are private equity funds, and they are grappling increasingly with kind of how do you incorporate impact and ESG decisions, ESG factors into investment decision making. How do you build great businesses that deliver great social and environmental outcomes, and kind of deliver for employees, for customers, for the LPs that are directing capital to them. So that's the vantage point I have.
Thanks. And maybe if we can then shift to Maya, you sit in a very different position within the ecosystem. So would love to hear a little bit about who your end clients are within this space.
Correct. Thank you. It's such a pleasure to be here with all of you. And I will bring a slightly different perspective to the conversation as a social impact focused founder. I'm really grateful to have the time to chat today. Just by way of quick introduction to me, I've spent the better part of my career, not quite 20 years in healthcare, doing primarily digital health and health access work. I spent most of my career prior to founding May at Pfizer doing that. May itself is a digital first services company that is focused primarily on a mission of reducing maternal health disparities for our most underserved mothers, right? And that is with the starting focus on Black expectant mothers who have the most striking disparity. We have the most striking disparities in maternal health outcomes for both ourselves and our children. Our customers are primarily Medicaid plans, and I think that is the perspective that I'll bring into the conversation. Medicaid plans obviously operate on an incredibly thin margin, particularly when we're thinking about dollars that they're able to spend outside of what is an approved medical benefit, right? So it is very, very critical as we're selling to that particular customer base that we provide a lot of clarity on our impact, whether it be quality, whether it be, you know, the dollars and cents of reduced clinical spend, because we're better mitigating outcomes on behalf of the members we're serving. That is something that is very, very core to our sales cycle and something that we have to be crystal clear on to get them, right, plan leadership to justify the dollars that we're asking them to spend and recommit to this population. And so, so to that end, I'm going to be really, really happy to dig in as a part of this conversation. And thanks again for having me.
Thank you, Maya. And Christy, would love to hear the same from you.
Right. Thank you very much. Delighted to be here and really love the paper. So excited for the research that Align has done. I am bringing more than 20 years of working in the traditional family office space to this conversation. I was president of the Institute for Private Investors and ran the private investor division at Family Office Exchange. During that time, I was working with families of means and watching them get more and more invested and focused on thinking about positive and social impact. And then a couple of years ago, I committed my career to my values and said I would only work in the impact space with families. And I joined the Impact, as Ishita said, as senior director over a year ago. We are a peer membership organization founded 9 years ago by families, for families. Today, we have more than 80 members across 5 continents and 20 different countries. The families are joining to learn. As one family just last week said, we want to see what is possible. And by learning from each other, the extraordinary work that families that our members are doing, all are committed to impact investing, even if it's the 34-year-old next gen who has no control of the assets yet, but they're trying to move the family as a system forward. I care a lot about structural alignment. I'm going to mention that a little bit later. I'm pleased that we are organized as a nonprofit. We're a 501c3, and our only objective is to help families to make more impact investments more effectively across all sources of capital, which is really important as well. And so my perspective is, I think you mentioned I'm representing the asset owners, the top of the food chain, the privileged small number who are really trying to do something in an innovative way and align and move beyond grant making. They're really trying. And so whether that is the next gen board member who's trying to nudge a little focus on the endowment and mission related investing, all the way to the wealth creator who's building a 100% aligned impact portfolio with some of the most sophisticated, most integrated metrics, which we're going to talk about out there. A lot of this is being done in really interesting single family offices around the world, and they're taking the gauntlet to figure out how to do this for their own capital.
Thanks, Christy. And I guess maybe being at the top of the food chain and juggling maybe 80 different families, we'd love to hear a little bit about how do the families utilize IMM for their decision making, and what are some of the challenges that you face when managing 80 families at the top of the food chain?
Well, first, I'm going to have the persona as a portfolio construction nerd. So to me, can you think of anything more exciting than a 3-dimensional efficient frontier? Imagine the possibility of optimizing for risk-adjusted impact. or impact adjusted return. The concept of adding impact to risk and return to widen the aperture in the language of impact is thrilling. It is an incredible way to engage across generations. This is the conversation families want to have, not the portfolio return 4.67% and the benchmark is 4.17% and everybody yawns and nobody cares. But what if people cared about what our capital can do in the world to the things we have alignment around caring about? So the idea of this risk and return and impact and optimizing for all of this is so exciting and so challenging, because there's, whether we think standard deviation is the right risk measure or not, we can have that conversation, but it's been the risk measure for 60 years. But there is no agreement. There is no standardization. There is not, whether it's quantitative, how qualitative, power structures, the philosophy even of measuring. Within our 80 members, some don't want to talk about IMM. Most do. IMM is how you operationalize impact, and it's really important. You operationalize vision through the measurement and management of impact. But there's other families that say, let's just break the dam of capital. Let's just move money and not set up more headwinds, more friction points. So I would say IMM is fundamental. Aligning the family is actually more of a challenge than IMM, but IMM is certainly the second most important challenge. And it's because of its total ambiguity and fuzziness, which it still exists in a pretty fuzzy space, and then the philosophy underlying it.
Yeah, and I think we at Align face similar challenges, and our clients are also at the top of the food chain. Maya, I guess I would consider you to be the only one here from us panelists to be one of the people doing the impact. So would love to hear maybe from your vantage point, what are the challenges that you face?
Yeah, I appreciate this question. And there are two particular things that really stand out to me, right? One is that time doesn't work in the favor of entrepreneurs, right? And so if I just hone in on my space, focusing in on maternal health, right? There's always this knee-jerk reaction to focus in on those big ticket lagging indicators and metrics, right? So what have you done and delivered for mothers up to 6 months postpartum and beyond, right? And for me as an early stage company within May, that does take a lot of time, right? It takes us a lot of time to support the entire pregnancy episode, the postpartum period, to be able to look at that across a cohort of users and to communicate something that is statistically significant, right? And so one challenge I think is to change that narrative a bit, right? And to really allow us space to think about both the leading and lagging indicators, right? What are the big ticket items we're hoping to influence, and what are the little things we can observe and monitor and track along the way that give us confidence that we're moving in that right direction, right? I think that's just very, very necessary and a part of the conversation that we have to have. The second thing that I think keeps me awake at night, but I'm pleased to say we're having really great conversations with our early plan partners about this right now, is that there's also this lens of thinking about who is most influenceable, right? And so again, I'll just stick with my maternal health space, right? Now, I'll actually use the example of myself. I am a 3-time C-section mom, right? Which means that if I were to have another baby, I'm going to knock on wood, that's not going to happen. But if I were to have another baby, right, I wouldn't necessarily have a 4th C-section, right? And so what's really interesting in my space of maternal health is we want to serve and support all mothers, and particularly those who are most in need. But there can be a scenario where we're penalized for doing that, right? And so there's a really fine balance, I think, to strike in terms of making the commitment to serving all, but also clearly defining who is influenceable versus not, and making sure that when we're measured against impact, we're measured in the right way and we're measured in a fair way, and we're not measured in a way that would essentially penalize us for serving those most in need or those with the most risk, right? And so I think, again, that's been a very fruitful conversation that I've been having with some of our early partners, which is, let's serve all, but let's also be really thoughtful in terms of how we evaluate the data on impact to make sure that where we are serving all and hopefully impacting all. We're also thinking about this from the lens of what was influenceable within our support model versus not, and how can we make sure that we're approaching that in a fair way, where we as a company are not penalized. You as a company are rewarding us for the right things, but we're looking at it from that shared perspective, and then with clarity and transparency and understanding. And I think that's just something that's challenging to navigate in my space in particular, but a very necessary conversation to have, and one that has to be had up front.
And in your position with your relationships with different investors, do you find that there are some challenging asks for IMM, or especially when you speak about impact data and impact metrics, are there challenges there?
Absolutely, but I would answer that by saying it very much depends on the investor, right? So I have less of a challenge navigating that with our investors who are social impact focused. I have more of a challenge navigating that with our investors who are not, right? And so I think there's a delineation there where I think the social impact investors tend to allow some time, right, for foundation setting, for making sure that we're getting that solution approach right. There's a lesser push to revenue, right? Because there is a foundational understanding that what we're creating is not one size fits all. What we're creating is specific to, right, our most vulnerable populations, and that is not just a blanket solution for all, right? And so yes and no, right? And I think my learning as a first-time founder is just to make sure that we find the right investors and we're thoughtful about that from the start, and vice versa.
Great. And Ben, from your perspective, maybe on this exact tension of impact data and what we have found as sometimes being overuse or overemphasis of impact metrics. What has your experience been, and is there advice that you have for how this can be different?
Yeah, it's a fascinating question. I would echo a lot of what's been shared to date. I think kind of my main segment of work is really with kind of large scale private equity funds. So I'm currently working with an industry initiative across the private equity community around this exact question, around kind of trying to standardize how they're thinking about some of these important ESG and impact metrics. I think kind of an interesting analogy that's been shared with me has been, we don't talk, each individual company doesn't talk to you about their proprietary approach to measuring kind of financial outcomes. But that's often kind of how we think about the impact space, because we're just kind of, we're building the kind of expertise, we're building the language, we're building the frameworks. I'm personally really encouraged by a lot of what I see kind of coming out of the impact management project, coming out of the Harvard kind of impact weighted accounts initiative, the kind of what I'm working on the ESG data convergence initiative. I think there's increasingly kind of like a body of data, a body of expertise that's helping funds to go out and actually capture some of this impact data, work collaboratively with their companies to do so, and to be able to have kind of more informed conversations as a result. So, I mean, one example that I'm doing, I'm working with kind of more than 260 GPs and LPs to kind of standardize how they think about carbon footprint, how they think about the kind of the inclusivity of the boards, the companies they're working with, how they're thinking about the jobs that are being created as a result. Not classic impact metrics, but kind of things that can be kind of reasonably easily standardized. And as a result, you're actually having much more empowering conversations. You're able to say, portfolio company A, how are you thinking about your carbon footprint in your industry relative to this benchmark of your peers that we're now able to create because everyone's using similar definitions around some of these frameworks? But to Maya's point, it's got, these kind of things have to be taken in the context of the strategy in which the company is operating. If you are deliberately going out and working with kind of underrepresented people from underrepresented backgrounds, those that are kind of hardest to impact, then there's got to be a different conversation around kind of the nature of that performance. So setting these metrics in the context of a strategy, in the context of a benchmark of their peers, and then most importantly, trending over time? How are these metrics evolving over time? What are you doing as an investor, as a company, to really kind of drive positive outcomes here? It's an exciting time to be working in this space.
Can I just add this concept? I'm thinking about a decabillionaire family that's committed to more than 10 billion to impact first investments. Imagine what they need from Maya and Ben's clients, which are 1.6% allocations. All these small funds, what is the portfolio aggregation of what impact is? Is it 4.2, which is impact weighting? Like how do you aggregate? How do you make sense of, for the whole portfolio, which is the family office perspective, how do you take a non-standardized, qualitative, appropriate GHG, totally different than maternal health outcomes, and narrative? These are anecdotal narrative measures that are coming in, and those are the right measures relating to each theory of change of each manager and each strategy. But what is supposed to happen at the portfolio level, this dashboard that says, are we on track? Are we not on track? And there isn't, well, there's a lot of work being done about measuring at the fund and manager level. It's not really, it's even harder, I think, at the portfolio level.
And Christy, maybe with that, is there something that you have seen being done that has advanced this this at all, or anything that the families that you represent are asking for that can be achieved?
They're asking for innovative, comprehensive, integrating financial at the sourcing, at the building of the portfolio. They need frameworks. What they need are frameworks. And IMP is a fabulous framework, but it is one framework. And we have members that are building some of the most, literally the most innovative, comprehensive, creative work I've ever seen. They're bringing in systems lens approaching. They're talking about levers. They're talking about how to assess on a financial basis. And then how do they think about impact? How do they have multiple silos along the filter to consider both financial and impact from an assessment of an investment perspective? Using IMP and customizing it, using SDGs and reallocating based on their own thematic sectors. So what's exciting and being done is well-resourced family offices with really creative teams that are willing to take this on, are building some with a principal, family principal that's willing to fund it. There's some incredible work, and it's, unless they're sharing it within our organization, where would that be shared? Single family offices doing incredible work. So it's just not moving into the mainstream because it's so deeply customized, and that's why it's working.
Yeah, I think one thing that we talk about in the paper is that impact metrics aren't for every strategy. Some things are much more quantifiable than other things are. And sometimes having the patience for more qualitative information and reading a paragraph or a page about what's happening could be more valuable than a metric, depending on the strategy. And that has also shed a lot of light on what I was saying earlier about really having the incentives in place to try to properly get people to do things better, just doing things rather than just measuring. So Ben, maybe I'd love to hear if you've seen or have observed any trends or innovations that you're hopeful about and has really made a dent in the work that you're doing.
Yeah, I mean, I think I'm seeing kind of like huge strides being made in being able to kind of develop this data, be able to kind of access it at the GP level, and actually kind of drive investment decisions off the back of it. So I'm constantly kind of advising private equity funds that are looking at potential assets and kind of helping them with the impact diligence, the ESG diligence of a kind of a business. And what's powerful is that you've got the kind of conventional commercial diligence readout insights. How's this business model structured? What's the kind of key trends? How's it positioned competitively? But then the power of combining that with the impact diligence and kind of the ways in which that this is tangibly changing, kind of affecting people's lives, and the way that that's playing out and making it a stronger business as a result, and the kind of collinearity of that, and kind of playing that forward 5 years, and trying to understand at the diligence level, to what extent is this a company that's differentiated on some of these factors relative to its peers, and kind of fully embedding that into decision making. For me, that again, I kind of work with fiduciaries that are kind of looking to do this kind of, and aren't taking a haircut on the financial returns, but actually kind of embedding that into into the kind of investment decision making. That's going to be really core for me in maximizing the impact potential from these investments.
And Maya or Christy, any innovations or trends that you've seen that you're excited about?
So perhaps not so much an innovation or a trend, but I wanted to comment on something you were speaking to a few minutes ago, which is just the need to think about the holistic experience, right? And I would maybe pull back from ESG for a moment and just speak about healthcare, right? Which is this idea that every individual experience healthcare consumers have impacts how they engage around their own care and the degree to which they engage in their own care, right? And so there is always this draw to focus in on, clinical outcomes and the associated dollars. But it is also very important for us to think a little bit more holistically around how we're supporting folks to have a trusted care experience that they're committed to and engaging closely around for the long term, right? And that is something that is extraordinarily difficult to measure, but it is also something that has a very lasting impact beyond just in the year, we're operating in currently, right? And so perhaps not a trend, but maybe just a hope that we can change the narrative a bit around what impact means, right? And pull away from some of the immediacy of it and really think about, how the totality of one's experience impacts how they engage for the rest of their life, particularly in healthcare. I think that's critically important. So I hope to see more of that. I think coming from the investment community, also coming from healthcare payers themselves.
Great.
I think say that what gives me a lot of hope, I'm actually turning on the dime of what I said earlier. On one level, maybe what's wrong with the investment industry was atomizing an investment portfolio to a Sharpe ratio, to some single number, some single idea. Isn't that the opposite of what we want to do? And you mentioned the lack of the end beneficiary. Where are they in the equation? Who's being impacted? And if we move more and more to dashboard reporting that says either 68% of the portfolio is now leaning towards the SDGs or has an IMP of C, or whatever, is that those voices, those stories, those narratives, the power dynamics, which I think are so critical. And so what I'm really excited about within the impact is a growing number of families that are unapologetically impact first. They're not just charitable, but they really want to move money with less focus on measurement, and they're trying to catalyze change, put that money, first loss money out there and see what comes after it. And Ishita works entirely in this space, but there's some very exciting work that is very much philanthropic and investment oriented, but great work that's being done and incorporating voices, I think, in a better way.
Yeah, I love that. And I think the voices of end customers is so important. Sorry if I stole anything that you wanted to leave the audience with, Christy, but maybe if each of you can go around and share as a final sentiment before we go to some Q&A, what is one piece of advice you would give impact investors about IMM?
I think I would double down on some of what Christy was just sharing, right? We need some of the emphasis to be on the human experiences and the lives changed beyond just the numbers, right? I think the numbers tell one part of the story, the personal and human experiences and learning more about how an individual's livelihood was changed, right? I think that is the color we're so often missing when we're rooted in a culture of reporting, right? And so just encouraging everyone to think about, you know, the sort of humanizing impact that we're having beyond just the numbers.
I would kind of echo that and just build on that to say, kind of, if you're measuring information and kind of not acting on that, then ask hard questions about why you're measuring the data. So kind of incorporating these factors into strategic decision making and kind of focusing on maximizing the impact.
And I think I would just say the combination of a top-down and a bottom-up approach at the same time, and the top-down trend needs to be more standardization, more transparency, more regulation. SFDR is pushing for double materiality. That's a lot of good things, I think, on one level, but then also this really focus on bottom-up and voices and power structures and anecdotes and narrative. And I don't know what that report looks like that combines both of them, but I think both have to be present in most conversations.
Great. Thank you all so much. This has been really wonderful to hear all three of you speak on this. We do have some questions from the audience, and I will pop it over to Ali to choose who gets to ask their question first.
Who's the lucky audience member? I guess Kyle's question came in first, which was directed at Ben. Kyle, I don't know. I'll just maybe ask this. I'll represent the questions in the chat box unless anyone feels strongly about asking themselves, but directed at Ben. As you mentioned, you sit between LPs and GPs in a unique position day to day. If you could fast forward 10 years and your work has been fruitful, impactful, sustainable, what does the IMM world look like?
Yeah, it's a fantastic question. I would say a couple of things I'd love to see. So I would love to see things like the impact weighted accounts initiative come to fruition, and everyone has a consistent impact adjusted EBITDA that they're able to use and able to help have kind of consistent conversations between GPs and LPs. I would also love to see things like, at the moment we have a lot of like heads of ESGs, heads of impact. They're doing really important roles. Ultimately, this needs to be embedded within the every investment professional should see impact and ESG as a core part of their day-to-day business, and that will definitely change over the next 5 to 10 years.
Great, thank you. I guess this is sort of maybe is to anyone who feels comfortable weighing in. What are some strategies to efficiently exit an investment while maintaining impact goals? Ishita, if you have thoughts on that, feel free to chime in as well. I know you've looked at underwritten a lot of companies thinking about this.
Yeah, I can step in here. I think one thing that we think about a lot is intention and this types of partnerships, relationships that are put in place early on. So for funds that have already demonstrated some exits, we want to understand like what has happened to those companies thereafter. Were the exits made to mission-oriented investors or not? And then for funds that are maybe just starting up for the first time, we want to understand like who are their relationships with to see if the intention is there to exit properly, which isn't, you know, like a perfect answer. It's not a silver bullet because there's some uncertainty with that still. But that's generally the intention that we like to see. And then of course, like the best case scenario is that a business model is inextricably linked to impact. Therefore, the more money that business makes, the more impact is being created. So that would be I think the gold standard.
I could just add that I think personally, if as LPs, as wealth owners, there is a commitment to managers and founders that is a bit more significant than in the traditional space. And so exiting, trying to keep the impact goals, but not doing a follow-on round is tough. That you've invested in an emerging manager who's doing something really interesting, and then you not following on unless there's a reason or they didn't meet their goals. Otherwise, I just think there's a little stronger need to partner with those founders and fund managers. And so it changes the impact goal if you take your capital away. It's the way it works.
Yeah, and maybe one thing I'll just add to the exit part is sometimes it's also about thinking about who is getting the financial benefits when there is an exit that's made. And maybe a hot take is there, and I also work on impact first investment, so this hot take comes with that maybe there is a concession that needs to be made in order to have the communities benefit from the financial upside.
Ben, do you have anything to weigh in on that as someone who operates squarely in market rate world?
I think it's all been well said.
Great. A specific question about climate impact measurement. Can any of you speak to challenges and opportunities related to climate impact measurement, specifically how to focus on the additionality of a given investment? Ben, maybe you.
Yeah, I'm happy to jump in here. So I think I'm working with funds daily that are kind of very much grappling with understanding the scope 1 through scope 3 of their portfolio. And there's a huge amount of work that needs to happen, and it needs to happen very quickly in kind of developing a really good baseline and understanding the kind of point of departure for most businesses. And there's a lot of just like methodologies and calculations and assumptions and work that is happening there. I would say I'd see two opportunities here. One is that kind of for those investors that are able to kind of develop a high quality baseline and show how they're reducing their baseline over time, that's going to be really kind of differentiating, at least for the foreseeable years. So that's a kind of a strategy of kind of decarbonizing, reducing that carbon footprint in a credible way, and doing it not by divesting, but by actively engaging with their portfolio company to reduce emissions. And then the second thing, which is really interesting around kind of climate tech investing, and you've got kind of this concept of scope 4, which is around avoided emissions and saying my product or service is able to replace an existing product or service that is much more carbon intensive. And there's much less kind of well-defined methodologies around calculating scope 4. So I think there's an exciting kind of opportunity there to be kind of at the cutting edge of kind of that methodology. And therefore, like there's a very strong additionality with the decarbonizing of a particular portfolio. And then on the additionality side of scope 4, it's a lot around kind of showing how you as an investor are able to kind of help that business scale in ways and kind of add kind of value to that from an operating perspective. So those are some thoughts on the climate side.
Yeah, that's helpful. No, I think that's really interesting. And I guess switching gears a bit, this is over back to that qualitative side of the conversation, which I know a lot of our conversation around climate is data driven and maybe a bit more quantitative. But on the qualitative research side, Courtney asked, can the qualitative research used by the field of social work, is that an approach that could help us measure impact when we're thinking about that balance between quality and quantitative impact metrics? Maya, do you maybe want to weigh in on that?
I'll chime in from a slight place of ignorance in that I don't know exactly how the field of social work documents impact, but intuitively my answer to that would be yes, right? Because I think it would be an individual like a social worker, right, who has visibility into what's going on, right, with individuals outside of the doctor's office, outside of a single moment in time, who can actually take a step back and speak to the extensiveness, right, of a change in that individual's life and what it means, right, what it means for them as individuals, what it means to their broader family, what it means to their broader community. And so again, I don't know exactly how social workers do this, but I do think, you know, in the comments I was making earlier, this is exactly intuitively, I think, what I meant, right, which is understanding that totality of experience and understanding the long-term impact of an adjustment in that experience, in that lived experience.
I might say, Allie, that in my same top down and bottom up, think of how much machine learning, data aggregation, either jobs gained or emissions reduced. There's so much data in the almost just throw it together from bots. And then there's incredible growth of data providers like 60 decibels, like Proof, that are more sociological. I don't think they're social workers. I don't know, but they're anthropological, sociological. They're interviewing, they're calling, they're trying to get that qualitative data. And there's so much going on there that's so customized to the client of these firms, that's very exciting. And if somehow these two trends can meet in some way, that's going to blow open a lot of excitement, I think.
Christy, quick question, just follow-on question. Anecdotally, which you and I have talked about how we sort of are sitting in complementary vantage points, working with lots of families and foundations who are asking these questions. Anecdotally, have you felt like qualitative impact metrics don't do it for them? Like, do you feel your family's pushing for more quantitative metrics across the board?
Completely individual. It's each family is different, and each entity is different. You know, in the foundation dollars, and they might have different leadership, and so they're perfectly comfortable. They've been using qualitative narrative-based, case study-based data beforehand, and they're perfectly fine. And then over in the LLC, you know, they want impact weighted, you know, 3.4, and you know, what does it? So I think it's very different. But I think the question is more, you can have a wonderful efficient frontier, a return and a impact measure, and the family can have a really interesting conversation about was 7 the right number on a scale of 1 to 10 for the like impact frontiers kind of work? You know, is that the right measure? And that's really interesting, but you can't do much with it beyond assessing that fund or strategy. It's very hard again to take it up and say, are we as a family meeting our own objectives for impact? That's just harder, I think.
Yeah.
One of the things I'll also add on the qualitative research for social work is part of our impact diligence work includes speaking with a subject matter expert who is not in the impact investing space, because I think some of the solutions impact investors think about are kind of insular. There's a lot of groupthink involved. So we tend to try to get a perspective that is outside of the investing sphere. Maybe as a final question, I see that Elizabeth asked, what are some organizations that are currently working on more standardized frameworks for impact measurement?
I think named a few. I think kind of impact weighted accounts initiative coming out of Harvard, impact management project, just having this like consistent framework that can be tailored. SFDR regulation coming out of Europe, that's driving a lot of kind of a lot coalescing around impact metrics. On the ESG side, I'll continue to plug kind of ESG data convergence initiative. Like it's really converging for the private equity industry around this common set of impact metrics. But yeah, Christy, I'd love to hear your thoughts as well.
I would echo, the IMP seems to be the one, as I know Align uses the IMP. It's both customizable, the 5 dimensions and the ABC. It's thoughtfully done, but it has its limitations, and in terms of some of this other data. So to me, again, it's families that are customizing and taking all of these sources and building their own seems to be the way of the future. And impact weighting is really cool for the PE firm. It's very hard to know what to do with that, I think, for the single data point, single number. So it's fantastic. What a place of innovation. Impact frontiers. Look at all these academics that are trying to play with this 3-dimensional efficient frontier. It's so awesome. And it's almost more noise in the system. It's just very hard to figure out which one to build on top of.
Yeah, I admittedly don't have a lot to add to this one. I'm less familiar with impact frameworks, generally speaking. In my space of healthcare, clinical data is king, right? And so we typically take an approach of really understanding what those primary cost drivers are on behalf of the customers we're serving. And to the conversation Christy was leading a little while ago, thinking a lot about how we actually connect the quantitative with the qualitative, how we actually connect engagement and behaviors with those downstream cost drivers and clinical impacts. And so within my little world of healthcare, it's a little bit different, but I will differ on the industry leading frameworks with my colleagues here.
Awesome. Thank you guys so much. We are at the top of the hour. This was a super interesting discussion, and I feel like it could go on much longer. Just a note to everyone in attendance, we will be sending out the white paper to everyone here, and there will be a recording of this on our website. And there will be a survey that pops up when you close the window. So if you could fill that out, that would be awesome. Thanks again to the panelists and to Ishita and Humayu for this amazing content. Have a good night, everyone.
Yeah.
Thanks all.
Bye.